ExamPrep.School. Washington Surety Insurance Producer Exam. There are 6 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Bail bonds, general contract principles, surety bond purposes and types, surety contracts and suretyship fundamentals, Washington laws, rules, and regulations. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under Washington state law, which of the following is an express statutory power granted to the Insurance Commissioner by RCW 48.02-60? A. Issue cease and desist orders against unfair trade practices. B. Approve all insurance policy forms before use. C. Negotiate insurance rates with carriers. D. Adjudicate disputes between insurers and insureds. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. The Commissioner is explicitly empowered to issue cease and desist orders to stop unfair trade practices, whereas form approval, rate negotiation, and direct dispute adjudication fall outside this statutory grant of authority. Reason B is not correct. Policy form approval is regulated but not framed as a direct power to individually approve each form under this statute. Reason C is not correct. The statute does not authorize rate negotiation. Carriers submit rates for review rather than negotiation by the Commissioner. Reason D is not correct. Formal dispute resolution occurs through hearings in courts, not direct adjudication as a statutory power. Question 2. According to Washington law, a market conduct examination by the Insurance Commissioner is primarily intended to determine whether an insurer is A. Maintaining its surplus above minimum levels. B. Complying with state insurance statutes and regulations. C. Achieving satisfactory policyholder service ratings. D. Maximizing underwriting profitability. The correct answer is B. Market conduct examinations are designed to assess an insurer's adherence to insurance laws and regulations, rather than financial solvency metrics, customer satisfaction scores, or profit measures. Reason A is not correct. Surplus maintenance is evaluated during financial solvency examinations, not market conduct reviews. Reason C is not correct. Policyholder satisfaction is not the specific focus of market conduct exams under state law. Reason D is not correct. Profitability is a business metric and is not assessed through a market conduct examination. Question 3. Under RCW 48.17. Which of the following is a valid ground for the Insurance Commissioner to initiate an investigation of a surety producer? A. Failure to account for and remit premiums collected. B. A rating downgrade of an affiliated insurer by a credit agency. C. Conviction for a misdemeanor unrelated to dishonesty. D. An increase in policy cancellation requests from insureds. The correct answer is A. The statute authorizes investigation when a producer fails to properly account for or remit collected premiums, whereas insurer ratings, unrelated misdemeanors, and cancellation volumes are not specified grounds. Reason B is not correct. Insurer financial ratings are not referenced as a basis for investigating producers under this provision. Reason C is not correct. Only convictions involving fraud or dishonesty trigger investigation authority, not unrelated misdemeanors. Reason D is not correct. Policy cancellation statistics are not enumerated as grounds for producer investigation in the statute. Question 4. After concluding that producer Y has repeatedly misrepresented policy terms, the Commissioner intends to issue a cease and desist order. Under Washington insurance law, which procedural step must the Commissioner complete before issuing the order? A. File the notice of intent with the state judiciary at least 15 days before enforcement begins. B. Obtain a court injunction prior to notifying the producer and scheduling any administrative hearing. C. Publish the proposed cease and desist order in the Washington State Register and solicit public comment for 30 days. D. Provide producer Y with a written statement of charges and notice of hearing no less than 20 days after service, as required by RCW 48.02. Cuenta set. The correct answer is D. The correct answer is to serve a written statement of charges and notice of hearing at least 20 days before the hearing, as mandated by RCW 48.02. 20. No publication or court injunction is required. Reason A is not correct. Filing with the judiciary and a 15-day lead time are not prescribed steps under Washington insurance law. Reason B is not correct. A court injunction is not necessary before issuing an administrative cease and desist order. Reason C is not correct. Publication in the state register with public comment is not a required procedure for cease and desist orders. Question 5. Under Washington law, which of the following individuals must hold a surety producer license before negotiating bond terms on behalf of a surety company? A. A clerical employee indexing and archiving issued bond documents. B. An in-house attorney providing legal advice to a sureties board. C. An employee negotiating bond provisions with an obligor. D. A claims adjuster evaluating and settling bond claims. The correct answer is C. This option is correct because any person who negotiates the terms of a surety bond on behalf of a company is acting as a producer and must be licensed under Washington law. Reason A is not correct. Indexing and archiving bond documents is clerical work and does not require a producer license. Reason B is not correct. Providing legal advice without negotiating coverage terms does not constitute producer activity. Reason D is not correct. Evaluating and settling claims involves claims handling, not negotiating new bond terms. Question 6. A non-resident individual seeking a Washington surety producer license must satisfy which requirement under state reciprocity rules? A. Establish a principal place of business in Washington state. B. Hold an equivalent surety license in the home state. C. Maintain corporate sponsorship by a Washington domiciled surety. D. Demonstrate a net worth of at least $50,000. The correct answer is B. This option is correct because Washington requires non-resident producers to already possess an equivalent license in their domicile state before granting reciprocity. Reason A is not correct. Non-residents do not need a Washington office. They operate under home state reciprocity. Reason C is not correct. No corporate sponsorship is required for non-resident reciprocity licensing. Reason D is not correct. Net worth criteria apply to insurers, not to individual producer licensing. Question 7. Under Washington insurance law, a limited line surety producer license authorizes the licensee to transact which of the following? A. Underwrite and issue all classes of contract and commercial surety bonds. B. Negotiate judicial and public official bonds on behalf of any surety. C. Solicit and negotiate surety bail bonds only. D. Provide underwriting advice for Treasury-listed sureties. The correct answer is C. This option is correct because the limited line surety license in Washington specifically covers bail bonds and does not extend to other classes of surety business. Reason A is not correct. A full producer license, not a limited lines license, is required for all contract and commercial bonds. Reason B is not correct. Judicial and public official bonds require a full surety producer license. Reason D is not correct. Underwriting advice for Treasury-listed sureties is not permitted under a limited lines license. Question 8. Alex is preparing to apply for a Washington Surety producer license and has completed the required 20 hours of pre-licensing education through an online school approved by the National Association of Insurance Commissioners, but not specifically approved by the Washington Office of the Insurance Commissioner. According to Washington regulations, which action must Alex take before the application can be accepted? A. Provide documentation that the out-of-state provider is accredited by the NAIC, as this satisfies the course approval requirement. B. Retake the required pre-licensing education courses through a Washington OIC-approved provider before applying. C. Request a waiver of the pre-licensing education requirement based on insurance experience. D. Submit a letter to the Washington OIC requesting approval of the online provider to waive retaking courses. The correct answer is B. The correct answer is that the applicant must complete the education through a school approved by the Washington Office of the Insurance Commissioner. Since Washington regulations require pre-licensing courses be taken from OIC-approved providers and do not accept only NAIC accreditation. Reason A is not correct. Providing NAIC accreditation proof does not fulfill Washington OIC's provider approval requirement. Reason C is not correct. Experience does not exempt applicants from completing the state's approved pre-licensing education. Reason D is not correct. Submitting a letter to request provider approval does not waive the requirement to take courses through an already approved source. Question 9. Under Washington state regulations, an insurance producer's license expires at which specific time and date in the expiration year? A. 12:01 a.m. on the day following the licensee's birth date in the expiration year. B. Midnight on the last day of the licensee's birth month in the expiration year. C. 11:59 p.m. on the licensee's actual birth date in the expiration year. D. Midnight on December the 31st of the expiration year. The correct answer is A. The correct expiration timing is prescribed by RCW 48.1770, stating that a producer license terminates at 12:01 a.m. on the day after the licensee's birth date in the expiration year. Reason B is not correct. Expiration is tied to the birth date itself rather than the last day of the birth month. Reason C is not correct. Regulation specifies expiration occurs after, not before, and at 12:01 a.m., not at 11:59 p.m. Reason D is not correct. Licenses do not all expire on December 31st. They are linked to individual birth dates. Question 10. Per Washington's continuing education requirements for resident insurance producers, how many total credit hours must be completed each 2-year renewal period? And how many of those must cover insurance ethics? A. 20 total hours including 4 inches insurance ethics. B. 30 total hours including 2 inches insurance ethics. C. 24 total hours including 3 inches insurance ethics. D. 24 total hours including 2 inches insurance ethics. The correct answer is C. Under RCW 48.1760 and OIC rules, resident producers must complete 24 credit hours per 2-year cycle, with a minimum of 3 hours in insurance ethics. Reason A is not correct. Total and ethics hour requirements are understated compared to statutory minima. Reason B is not correct. Both total and ethics hour figures exceed or misstate the mandated amounts. Reason D is not correct. Total hours are correct, but ethics hour requirement is below the required minimum. Question 11. A Washington insurance producer submits a renewal application 20 days after the continuing education deadline without having completed her required CE hours. According to state regulations, what must she do before she can legally transact insurance business again? A. Retake the licensing examination and then fulfill all CE requirements. B. Pay a 50% late renewal fee and complete the outstanding CE requirements within 30 days of the missed deadline. C. Submit a written plan to complete the CE hours within 60 days without any additional fee. D. Immediately cease all transactions until paying a $200 civil penalty to the commissioner. The correct answer is B. The correct answer is that the producer must pay the prescribed 50% late renewal fee and complete the outstanding CE requirements within 30 days. Under Washington law, late renewal within 30 days incurs an extra fee and requires fulfillment of CE before the license is reinstated. Reason A is not correct. Requires retaking the exam, which is not mandated for late renewals under state CE rules. Reason C is not correct. No provision allows a 60-day extension without a fee. The window is 30 days with a late fee. Reason D is not correct. A flat $200 civil penalty is not the specified remedy for late CE-based renewals under these regulations. Question 12. Under R. CW 48.30 governing surety insurance, which of the following actions is explicitly classified as an unfair trade practice? A. Misrepresenting the terms or benefits of a surety bond to induce purchase. B. Charging a premium in accordance with the filed rate schedule. C. Canceling a bond due to non-payment of premium after due notice. D. Submitting a bond application with all required underwriting documentation. The correct answer is A. The act of misrepresenting bond terms or benefits is expressly listed in RCW 48.30 as an unfair trade practice because it deceives the purchaser about the contract's obligations and protections. Reason B is not correct. Charging premiums as filed follows the insurer's approved rates and does not involve deceptive practices. Reason C is not correct. Canceling for non-payment after notice is a permitted administrative action rather than an unfair trade practice. Reason D is not correct. Submitting a complete application is a normal underwriting requirement, not a prohibited practice. Question 13. Which of the following is an example of misrepresentation in the sale of a surety bond? A. Guaranteeing that the bond will absolve the principal's personal liability for contract performance. B. Informing the obligé of the bond's coverage limitations as specified in the bond form. C. Quoting the premium exactly as filed with the state insurance commissioner. D. Providing the principal a copy of the executed bond upon issuance. The correct answer is A. Promising that a surety bond absolves personal liability misrepresents the nature and scope of bond coverage and is prohibited as a misrepresentation. Reason B is not correct. Informing of coverage limitations is a required disclosure and does not misrepresent bond terms. Reason C is not correct. Quoting premiums as filed is standard practice, not a misrepresentation. Reason D is not correct. Providing the executed bond copy is proper procedure, not misleading. Question 14. Under Washington surety regulations, which of the following constitutes prohibited rebating or illegal inducement in a surety transaction? A. Offering to refund part of a premium directly to an applicant as an incentive. B. Providing applicants a brochure detailing standard bonding requirements. C. Applying a premium discount consistent with the approved rate manual. D. Mailing standard business cards to prospective principals. The correct answer is A. Refunding part of the premium as an inducement violates anti-rebating provisions that prohibit any return of premium or commission to secure business. Reason B is not correct. Distributing informational brochures is a permissible marketing practice, not an inducement of value. Reason C is not correct. Applying approved rate discounts adheres to the rate manual and does not constitute rebating. Reason D is not correct. Mailing business cards is standard advertising and does not involve returning premium or commissions. Question 15. A producer informs a contractor that they will only issue a performance bond if the contractor purchases a builder's risk insurance policy through the producer's agency. Under Washington's unfair trade practice regulations, which statement is correct regarding this tying arrangement? A. It is allowed provided the contractor gives written consent after full disclosure. B. It is permissible if the producer remits a referral fee to the contractor. C. It is prohibited as an unfair trade practice regardless of consent. D. It is allowed when bundled as part of a bona fide group policy. The correct answer is C. Washington law classifies tying placement of a bond to purchase of unrelated insurance as an unfair trade practice, prohibiting such arrangements regardless of consent. Reason A is not correct. Even with full disclosure and consent, conditioning a bond on unrelated insurance violates the tying prohibition. Reason B is not correct. Payment of a referral fee does not legitimize an otherwise unlawful tying arrangement. Reason D is not correct. Bundling unrelated policies does not exempt producers from the prohibition against tying arrangements. Question 16. In contract law as applied to insurance, the requirement that both parties manifest definite and mutual assent to the terms corresponds to which of the four essential elements of a valid insurance contract? A. Competent parties. B. Legal purpose. C. Consideration. D. Offer and acceptance. The correct answer is D. The correct answer is offer and acceptance, which denotes the mutual assent required for forming a valid insurance contract. Reason A is not correct. Competent parties refers to the capacity of the parties to contract, not their mutual assent. Reason B is not correct. Legal purpose ensures the contract's subject matter is lawful, not the meeting of the minds. Reason C is not correct. Consideration deals with the exchange of value, not the demonstration of mutual assent. Question 17. Tri-State Construction L. C. and Urban Build Corp. Formed a joint venture to undertake a highway expansion project for the Washington State Department of Transportation, WSDOT. To secure project performance, the joint venture obtained a performance bond from United Surety Corporation. Under this bond, which entity serves as the principal? A. Obligio Washington State Department of Transportation. B. Contracting entity. Tri-State Construction, LLC. C. Surety Entity United Surety Corporation. D. Tri-State Construction, LLC Urban Build Joint Venture. The correct answer is D. The principal is the bond obligor responsible for project performance, which in this case is the joint venture of Tri-State Construction, LLC, and Urban Build Corp. Reason A is not correct. The Washington State Department of Transportation is the obligé receiving the bond protection, not the obligor. Reason B is not correct. Tri-State Construction LLC alone is only one partner and not the obligor, since the bond covers the joint venture entity. Reason C is not correct. United Surety Corporation is the surety, underwriting the bond, not the obligor. Question 18. Which of the following best distinguishes suretyship from traditional insurance? A. Surety indemnifies actual losses once a principal defaults, while insurance compensates for covered events up to policy limits. B. Surety assumes primary liability for obligations from the outset, whereas insurance transfers risk only after a loss occurs. C. Surety provides a contingent guarantee of performance or payment obligations, whereas insurance offers pure indemnity for defined risks. D. Surety pools risk among principals to cover defaults, while insurance guarantees performance to third parties. The correct answer is C. The correct answer is that suretyship creates a contingent guarantee of the principal's performance or payment obligations, whereas insurance provides indemnification against losses arising from insured events. Reason A is not correct. This option describes indemnification of losses rather than contingent guarantees, making it inconsistent with the nature of suretyship. Reason B is not correct. Surety liability is secondary to the principals until default, so it does not assume primary liability from the outset. Reason D is not correct. Surety does not operate as a risk pool for defaults and does not guarantee performance to third parties in that manner. Question 19. In a three-party surety arrangement involving an obligé, principal, and surety, who ultimately bears the indemnity obligation to the surety once a claim is paid? A. Obligee under the bonded contract. B. Co-surety sharing the risk. C. Principal who obtained the bond. D. Third-party guarantor appointed for collateral. The correct answer is C. The correct answer is that the principal must reimburse the surety for any payments made under the bond, since the principal indemnifies the surety under the indemnity agreement. Reason A is not correct. The obligé receives bond benefits but does not have an indemnity obligation to the surety after payment. Reason B is not correct. A co-surety shares risk, but is not the primary indemnitor under the indemnity agreement unless specifically named as principal. Reason D is not correct. A third-party guarantor may provide collateral but does not replace the principal's direct indemnity obligation. Question 20. Which mechanism does a surety most commonly employ to fulfill a contractor's performance obligations under a performance bond? A. Paying the full penal sum directly to the obligé upon default. B. Arranging for completion of the contract through the original contractor or a replacement. C. Withholding progress payments from the obligé until milestones are met. D. Referencing a third-party guarantor to cover the contractor's performance. The correct answer is B. The correct answer is that a surety typically arranges for contract completion, either by engaging the original contractor under a new schedule or hiring a replacement, to ensure performance rather than simply paying the penal sum. Reason A is not correct. Surety does not usually pay the penal sum directly, as that would not guarantee contract completion. Reason C is not correct. Withholding payments is the obligé's remedy, not a mechanism employed by the surety. Reason D is not correct. A third-party guarantor is uncommon. The surety itself secures performance directly. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.